A little over a decade ago, crypto was dismissed as a fad, or worse, a playground for hackers and libertarians. Fast forward to today, Wall Street giants, pension funds, foundations, and even governments are now in the game. The question is, what does this institutional embrace mean for the future of finance, and what risks still remain? Today, we'll explore crypto's journey from fringe to future with the experts who have been shaping, investing in, and regulating this space. Today, we have Don Harflinger of Opihi Ventures and Myriam Benson of Kadena. And because I'm seated here with two trailblazers, I'm going to ask each panelist to just talk a little bit about your career in crypto and blockchain. Let's start off with you, Dawn.
Sure. Aloha, everyone. Happy Friday. My career in crypto. Okay, so I'll try not to run down the clock. Crypto started with blockchain, or started with Bitcoin, as all things do. And we had a long-term research so I should back up here. I'm a former CEO and CIO of a private foundation in town, Lili Uokalani Trust. They're managed over $1 billion in assets, and invested those assets across really kind of 4 major themes. One of them was around the scarcity of things, food, climate change, those kinds of things, changing demographics, and the future of healthcare, so people living longer. And then the fourth one, which is probably, you know, the biggest one, which is technology and the future is faster than you think, which is the title of a book that I love. You know, within that future is faster than you think, it sounds sort of pedestrian now, but when we started these investment projects really back in the early 2000s, we were thinking about interplanetary life, we were thinking about you know, flying cars, flying taxis, SpaceX, and getting anywhere in the world in an hour. The bridge between sci-fi and sci-fact is closing. And, you know, so those kind of broad investment themes eventually lead you down an exploratory journey towards Bitcoin. And when we found Bitcoin, we kind of literally like stumbled into it, and we thought, okay, you can make money in this, but really there was no way to participate as an institution because there was no regulatory certainty. You couldn't even custody it like in a audited, in a way that you could have an auditor sign off on it. So, you know, we followed it for a very long time and eventually led us into the Bitcoin and digital asset space. But that's kind of my journey. And, you know, anyway, it's good to be here. Nice to see you all.
Thank you. Myriam?
Absolutely. Aloha, good morning, everyone. Thank you so much for having me. My name is Myriam Benson. I am Capital Markets Lead at Kadena. We are a layer 1 proof of work, public permissionless blockchain. Prior to joining Kadena, I was very much in the TradFi world. I started my career in capital markets for a French bank, where I was helping sales and traders better understand the regulatory environment that we operate in, so pre-trade. After that, I joined a large stock exchange where I was working on strategic initiatives. The first one that I worked in was the development of an ESG data platform for asset allocators and asset managers to better understand their allocation into these ESG products in their portfolios. And shortly after that, I was staffed on a digital asset custody solution. Can you hear me? I'm sorry. Yeah, okay. So shortly after that, I started working on an initiative to develop a digital asset custody solution. And unfortunately, so we had developed it, and unfortunately that was short-lived because after the FTX debacle of November 2022, we've been asked to just stop working on this solution, and I was given a choice, basically, go back to work on ESG initiatives or pursue a career in digital assets. And I chose the latter, which is why I joined US Bank back in 2021, 2022, to lead their digital assets initiatives. And amongst them was the build of a digital asset custody solution that was meant to be both blockchain agnostic and product agnostic.
Great. Great. Thank you for that. Okay. Can you guys hear me?
No.
You can hear me? Okay. Thank you for that. So I'm excited about this subject because my mom started asking me about Bitcoin and blockchain. And I know we're talking about institutional adoption, but I think crypto and blockchain are making their way into family conversations, and it's really become the new normal. I remember vividly when the late, great Charlie Munger of Berkshire Hathaway called crypto rat poison. And now we have a lot of next generation going into this asset class. So for each of you, what was the moment you realized institutions were taking crypto seriously? And I'd like to start off with Don, because you touched on this at the Liliuokalani Trust. If you can talk about how institutional investors, how you got institutional investors to buy into crypto.
There were no institutions investing into crypto, and the research, we were looking at it back from 2015, really, 2014, looking to allocate capital around 2017. Nobody was doing it. We were fortunate to have very long-term investors on the board, so they understood the potential. Endowments and foundations, the job of endowments and foundation is to keep their endowments going in perpetuity. They need to fund future programs while funding current programs. And so what that really means for investments is to have overall a growth strategy in their investment portfolio. And when you look at long-term growth and you think about, again, these four major themes that we were thinking about, you knew that it was inevitable over a long enough time horizon. It was going to happen. But the challenge was that there was no adoption on the institutional side. And we thought that in itself was an opportunity. And Myriam can talk about the institutional in terms of, really Wall Street being institutional ready, because Wall Street was far more accepting, I think, of the technology simply because they saw it as a means to, making money, serve their clients, things like that. But on the endowments and foundation side, they still, to this day, there's a lot of people who have, explicit mandates to not invest in cryptocurrencies. They see it as too risky. But we leaned into it, and we just knew that you had to size the risk appropriately. And I think if you could have gone back in time, the 70s, 80s, 90s, and spread a lot of this tech bets around, you may have lost on some, but you would have you would have overall, you would have done well. And that adoption curve is what we were betting on, which I know the board used to hate it when I use the word bet, but that's what we were betting on. Because you're playing a long game in institutional land. You're not just investing for a 3-5 year return. You may be investing for 10, 15, 20, 25, 50 years. And, we just thought, okay, if we, if we put some in now, would we regret it in 50 years? Probably not. Like, it's probably going to be a volatile ride. But you size it appropriately. And but sorry, back to your actual question, because I can talk about this for years, is that there was no institution, and there's still a lack of institutional capital in this space, but now it's getting to the point where people, whether they like it or not, have some exposure, if not necessarily to the coins, but to the venture side, the venture piece, the technology piece, which I think is the opportunity here in Hawaii. As we're talking amongst ourselves about what Hawaii has the role Hawaii has in this whole future of digital assets. It really is in this venture space and what we can do here locally to leverage that technology from the middle of nowhere in the Pacific Ocean.
Myriam, what was the moment you realized institutions were taking crypto seriously?
So for me, the moment I realized institutions were actually taking crypto seriously was when BlackRock filed for and actually got approval with the SEC for their spot Bitcoin ETF. If I remember correctly, I believe they filed for approval in June of 2023, and they got their approval from the SEC in January of 2024. So think about it, that's 7 months, which is lightning speed in terms of traditional asset management, timeline and space.
Yeah, I mean, I remember covering that. And also, there was a lot of resistance from JP Morgan's Jamie Dimon to get exposure. But again, when there's appetite and demand for an asset class, if you are a CEO or chief executive, as you pointed, Don, you are essentially forced to really take a look at this.
Well, yeah, especially, Wall Street, Wall Street will make money regardless, so I used to have a running joke, this is not, I'm being sarcastic here, but my running joke was the people that said that they hated it were just the people who haven't figured out how they're going to make money off their clients yet. And so they just didn't quite understand it. They just had to, it took them a while to do it. And a lot of them actually had to invest personally to actually learn. They didn't want to do it with client money. And so they were like, okay, wait, we're not doing this and we're going to just experiment. But, they figured it out. A lot of those guys have changed their tune on where they are. And look at Franklin Templeton. There's a lot of stuff going on there.
Right. I was watching an interview with Jenny Johnson of Franklin Templeton, and she said that this is definitely the future. We are in the future. Can you folks talk a little bit about, Bitcoin as digital gold? Are we there? And what's the one myth about institutional adoption of crypto you'd like to debunk right now, Myriam?
Okay, I'll start with
digital gold.
Digital gold. So I think the concept of Bitcoin as digital gold is still very much a retail concept in the sense that you and I invest in Bitcoin as a hedge against inflation. Now, if I were to draw a parallel, there are about 250 public companies that have invested in Bitcoin and that are actually holding Bitcoin in their balance sheet. And out of these 250 public companies, 35 of them hold over 1,000 Bitcoin. Companies like Tesla, like Strategy, came said very publicly that they were actually holding Bitcoin for macroeconomic reasons. So that's the parallel I would draw for corporates in terms of Bitcoin being digital gold. And to your second question, one myth that I would love to debunk is that institutions think that crypto is junk. Back in 2017, and I think you alluded to it, Jamie Dimon literally said, I would fire in a second any trader that trades Bitcoin. Fast forward to May 2025, JP Morgan is offering Bitcoin to their clients. So I think this speaks volume about the shift in institutional sentiment.
And it also didn't help that Jamie Dimon's daughter was telling her father that she was invested in Bitcoin.
That she was invested in Bitcoin too, exactly, 100%. So yeah, that's a myth that I would love to debunk you indeed.
Great. What about you, Don? What's one myth about institutional adoption of crypto you'd like to debunk right now?
That's a really good a myth. I think some math and some discussions have to go around, have to really focus on the volatility of the asset. I do think that we're getting to a point of adoption where we're further along the maturity curve. And I do think that you'll see less volatility, although I'm saying that now and everything's going to crash like in an hour. But, I think I do think that given where we are on the adoption curve, that all of this institutional activity actually should provide some dampening of that volatility, and I think that so I think that's a myth. I think institutions need to grapple with the fact that they need to update their volatility, budgets where it comes to the cryptocurrencies and the digital asset innovation.
Did you want to jump in?
Yeah, absolutely. Actually, to piggyback on that, I think in terms of volatility, the fact that institutional investors are now a big player, in this space, kind of shifts the type of volatility that we're facing from a more kind of retail induced volatility to a more systemic and macroeconomic type of risk that we're now facing with these large institutional players coming into the
I want to
fold.
pivot a little bit to your background, Myriam, with blockchain. So you led the build for the U.S. Bank's blockchain-based digital assets platform. What would you say was the motivation for the bank to adopt blockchain?
Yeah, sure. Quick background on that. So we were tasked to build the first iteration of, as I mentioned, a blockchain and product agnostic digital assets platform. And as part of that, we did a proof of concept back in 2021, 2022. We issued, I believe, what was one of the first digital ESG bond with a California-based CDFI, Community Development Financial Institution. And the main factors for a bank like U.S. Bank, or I would think any other bank, to adopt blockchain are, in my mind, threefold. The first one being, always follow the money, reduce costs, increase operational efficiency. Blockchain technology has the ability to collapse settlement times from T+2 to near real time with reduced counterparty risk, and decrease costs. So that's an incentive for the bank to adopt blockchain. On top of that, I don't know if I mentioned, I joined digital assets and ESG team, and blockchain is, I think an earlier panel actually talked about that, is provides an immutable, tamper-proof ledger, and that's extremely helpful for the clients that we had back then who wanted to report on ESG and on their progress towards their sustainability goals to their investors. And the last point that I would like to bring is the fact that this technology brings about new products, meaning new revenue streams. Back in 2017, US Bank had opened its crypto digital asset custody solution with NYDIG, and they had stopped it for a few years during the regulatory uncertainty years that we've had. And as of 2 weeks ago, they just resumed their crypto digital asset custody offering solution, which to me signals that banks are very much back in business.
My question is for Dawn on crypto and blockchain. You know, I'm a local kid, and I think we have a lot of catch up to do in Hawaii. Why are we having a hard time adopting blockchain? And what can we do about it?
Why and what do we do? Okay, so where do I go first? So why Hawaii is in the middle of the Pacific Ocean. Senator Keokalole talked about this earlier today on his keynote, and he talked about the innovation of Native Hawaiian people. And I think the state of Hawaii in general, I think has an opportunity to really lean into that strong foundation of who we are as island people, as Native people. I think there are bright spots. It may not be in crypto or digital assets right now. There are some. We are like people in the room. There's, I don't know if anybody knows, the most winningest sports team at the University of Hawaii is the esports team. I don't know if you guys knew that. I bet you probably didn't know that Microsoft, who owns Xbox, and several other game designers headhunt at the University of Hawaii because local kids understand Asian anime culture. And we are a hot spot for hiring all of these local kids. And what are they doing with these local kids? They're either working remotely or they're sending them to San Francisco or wherever they are, Seattle, whatever, and they're working on this game development stuff on the continent. So like the kids are interested in this stuff. The kids are interested in the NFTs. The local kids, they see it because they understand what that tech means and what it does for them. They understand that they can talk to everybody in real time and they have friend groups online and they're gaming. So they're just a lot more they just know this stuff and they're much more fluent in it. I think the Hawaii as a whole could lean into this. I have a personal dream that people could be in some kind of tech field when it's the hottest part of the day, and then go work the lo'i or go surf waves, whatever. And you can do that, and you can stay home in Hawaii. I mean, it's a cheaper export than tourism or federal or the federal government, or we have an opportunity to diversify our revenue streams and to have our kids stay here. Crypto is something that could allow that to happen if we just invested in that technology and we invested in that ecosystem. I mean, half of Silicon Valley lived here during the pandemic on Maui. 80%, I think, of the venture capitalists, I say that jokingly, but kind of seriously, they were all living on Maui. And so I just think it's a shame that you have all these venture capitalists that get super rich and then come live in Hawaii. Why don't we just build our own VC ecosystem here so that our kids don't have to leave, right? Anyway, soapbox.
To that point, you do have Mark Zuckerberg, Jeff Bezos, the Mark Benioffs of the world, establishing second residency here in Hawaii. So I share your dream as well.
It could happen. I am telling you, it could happen. It just, it takes a community to do this. And I think it goes beyond crypto and blockchain. I think it goes anything tech. We have a direct, Kauai has a direct link to, I think, Tokyo, I forget which one. And then on Oahu, right, it goes straight to, I can't remember where that one goes. Does that one go to Hong Kong? Somebody, I don't know. But anyway, we have like pipe that actually, did you know that if you're an e-gamer, you have like an 8 millisecond advantage if you are gaming here in Hawaii versus like in Oakland, and that matters in e-gaming land. I'm not an e-gamer, I don't know, but like it matters, okay, you guys, like it matters. So anyway.
Myriam, I know I'm putting you on the spot. I know you're not local.
No,
your background, you're French,
yes.
But you live in the U.S. What are the opportunities for institutional investors in Hawaii? And is this your first time in Hawaii?
Yes.
Oh, okay.
This is my first time in Hawaii, so thank you so much for having me here. Let me think about it. I believe I read that the state of Hawaii was very active when it came to promoting programs that offset carbon emissions. So again, with my ESG background, I would think that a great use of blockchain technology would be to actually track carbon credits on chain. Just to give you a little piece of statistics that always just blows my mind, I think only 30% of the world emitted carbon credits are accounted for. So there's clearly something broken with the technology, and I do believe that blockchain is, because of its immutability, is a solution to this problem. So I could definitely see an opportunity with that. I think someone else on the panel earlier mentioned land titles, and I think same thing, tracking land titles on and land ownership on blockchain could be a great use case for Hawaii. The Bergen County, actually in New Jersey, tokenized about $270 billion, I think, in property titles, if I'm not mistaken, with balcony. So I think there are definitely opportunities and real world utility and use cases in Hawaii.
Don, will crypto still be considered an alternative asset, or will it be as standard as equities? We still call it alternative, and I've heard a lot of wealth managers offering alternative assets and to their high net worth clients, and I just wonder if it's going to stay that way. As you said, there's a lot of volatility. You don't know if we check markets, it might be plunging, or is it going to be standard like stocks and bonds?
Yeah, I think it's going to have to be. It's not an asset class. I just don't think you look at it the topic of endowment asset allocation needs to be revisited. But I think at the end of the day, you are going to be using. I think people get mixed up. crypto technology, digital asset technology, and cryptocurrency technology versus the cryptocurrency versus the venture capital. So I think it kind of depends. I think what you're going to end up doing, just like, you know, we had index funds for so long, and then you had ETFs. And then so now everybody had to go, wait, do I own the index? Do I go to Vanguard or do I own this ETF? Like, what the heck am I doing? I think in the future for long only equities, you're going to have to make that decision. Do I just own it on chain, or it's just going to be like a part of the calculus that you're going to have to figure out. I think in fixed income, it's going to be another debt vehicle. So you're going to have to think about staking. You're going to have to figure out what does that mean. And so there too, so I think the technology, crypto will be, somebody said it's going to be invisible in an earlier panel. Some parts of of the public and private equity markets are going to look invisible. It's just going to be a choice. But there will also then be this constant innovation on top of the level 1, level 2, and just kind of ongoing. Like, we haven't even gotten to like the quantum computing stuff yet. So there's going to be continued to be, and in that sense, it will be a thoughtful allocation to venture capital, if that makes sense. So I think it's kind of all above answer.
And like I said, my mom started asking me about Bitcoin, so I was like, oh, is it time to sell?
If your mom or your grandma is constantly talking to you about Bitcoin, you know that it is like, it's a thing. It's not going away.
Right.
Yeah.
Myriam?
I would like to distinguish when we talk about crypto, the Bitcoin, the Ethereum, the potential spot Solana ETF, and altcoins and meme coins. I think down the line with regulatory stability, we may see Bitcoin becoming more of a mainstream asset class and allocated into portfolios, but I think it's really down the line, and I like the distinction that you made, Don, between crypto and the underlying technology, which is blockchain. A point that I would like to make is that institutions, yes, institutions are buying into Bitcoin, but what they're mainly buying into is the underlying technology, which is blockchain. Blockchain, I mean, I mentioned a few benefits earlier, but are to me the future of they are the new digital rails of the future, which will which will increase the velocity of how money is moved globally. So I think it's important to make the distinction again between which cryptocurrencies we're talking about, because some of them, just like Bitcoin, Ethereum, are becoming more mainstream. The fact that, you know, you can access them via ETF, which are vehicles that we're familiar with, that are regulated, makes it easier for both individuals and institutional investors to buy into. That you do away with kind of, you know, buying it, the risks of buying it yourself. But I think it's important to make the distinction between also, as you said, Dawn, crypto and the underlying technology.
Wonderful. I know we have to wrap up in about 5 minutes, so I have 2 more questions. What innovations could push the next wave of institutional adoption? Is it tokenized treasuries, AI integration? Don, who wants to take this?
Institutional, you know what? I'll take institutional from an endowment and foundation space, and
Yeah,
you
sure.
can take institutional from a Wall Street space. But for endowments and foundation, I think you're already seeing it. The regulatory clarity is important. We got past the audit, we got, the audit requirements, we got past, it is becoming an investable asset space now. And so I think the regulatory clarity is going to be the thing. I mean, you already see some of the late adopters sort of thinking about dipping their toe, although it's like, oh, we'll do like 1%. Oh, that's not going to get you anything, but you know what? It's a start, so that's fine. And so I think the regulatory clarity is good. Now, and also the other thing is pretty soon, those of us, like Liliuokalani Trust, for example, that were early investors, call it 2017, 18, 19, 20. We are now in 2025. Pretty soon, those 7 to 10 year numbers are going to be coming out from those private equity funds, and they are going to be a material win. And so when you see the separation of returns from endowments and foundations, and not quite pensions, but endowments and foundations that have actually made a ton of money in this space, that is actually what's going to trigger, because everyone's going to say, oh my gosh, how are we lagging everyone else? And then there's going to be a catch up. I mean, at that point, I would argue it's going to be too late, but that's okay. I mean, that was the whole strategy of being an early adopter, so that you could just, buy into the up. But anyway, returns, when those private equity returns start coming in, it should move the needle.
Myriam, what innovations could push the next wave of institutional adoption?
So I think if the first wave of adoption was Bitcoin, I would say the next wave that will push adoption is tokenization of real-world assets, working hand in hand with AI innovation. Working at Kadena, I see a bunch of AI companies coming up to solve for capital problems, capital market problematics, such as KYC, AML, compliance, or even AI trading agents. So, I think I also would like to add something that ties back to the previous panel about tokenization of real-world assets. I think we're very much past the POC phase. So I did that POC back at US Bank in 2021, and we're very much in the return on investment, measurable return on investment phase. Tokenization of real-world asset is a $26 billion industry by market cap. That's huge. There are companies out there like Broadridge, for example, who tokenize $6 billion in repo a month. Figure, a fintech that tokenizes HELOCs, tokenizes over $600 million in loans per month. These are huge numbers, so I do think that the next wave is tokenization of real-world asset, working hand in hand with AI-driven innovation.
And if you had to bet on one development that will define crypto's next decade, what would it be? Don? I know I'm putting you folks on the spot, but you were an early adopter for your trust of Bitcoin. So, what's the one development that will define crypto's next decade?
I think it's going to be the invisibility of it. I think it's going to become so seamless. People now don't hesitate to do Apple Pay. You don't think twice about, going online or downloading an app. And, cryptocurrencies, digital assets, however you want to word it, it should be invisible at some point. And I think that will be the defining. I think that's what's coming around the corner in the next decade.
Myriam?
Completely agree with you. I think the move from Web 2 to Web 3 should be completely seamless. At the end of the day, the end consumer shouldn't even know that it is running on blockchain, to be honest. Who cares? I mean, I'm saying that, and I work for an L1 blockchain, but ultimately, who cares? It's just a better technology. We're headed there. The end consumer doesn't need to know. We moved from Web 2 to Web 3. Now, I think in the next decade, we'll see a move towards DeFi and TradFi kind of bridging together. So decentralized finance and traditional finance bridging together. That would be probably the trend that I would.
You're going to have to come back to Hawaii to talk about that. How about a round of applause
Yes.
for Dawn and Myriam? Thank you both.
Thank you.